I'd like to just give you a quick overview of the real background, if you like, as to global macroeconomics at the moment, where markets are heading, and what we can expect, I guess, in terms of demand for all your fine products that are being offered here tonight. I have a slightly different view. As I said, white crane to counter the black swan. For several years now, we've been hearing about the black swan fears and world depression and that sort of thing. In fact, in late 2008, early 2009, global markets priced in a global depression that we never had. Through most of last year, global financial markets priced in a global recession that we never had, were never likely to have, was never on the table, and was pure fiction. Yet, it was certainly the consensus view. The good thing about that is that that has depressed prices in various markets and created the opportunities, the investment opportunities that we're unlikely to ever see again in our lifetimes. I was interested with the early clicker testing there in terms of investment decisions, when you're going to make your investment decisions. I mean, if you haven't made them by now, you're probably already behind the ball, but it's not too late. I'd certainly be making them this week, now, or this month, and after my talk, I hope I'll bring forward those investment decisions, because the ship has already left the port, but you can still get out to it. That is the resumption of what is a grand bull market in equity markets. On the 11th of March 2009, I said that we'd made the major low, and that we'd have 5 to 15 years of a bull market. So far, so good. After I made that call, the Dow Jones rallied 100%, before then having sort of a typical second wave correction. All we've seen since the 2009 low, even in the Australian markets, is a first big up wave and then a long period of consolidation. We, in fact, have been even in a recent bull market for some 5 to 6 months now. To me, it's not even a debatable point. Markets have been strong for a very long time. And markets are only just beginning to price in a rather different world economic situation than perhaps many of us have been reading about in the press or hearing on television. I'd like to introduce a few concepts that I myself coined, so I tend to like them. I hope you do too. One of those is the new first world. The new first world consists of Asia and Latin America. The other new term I coined was old first world. And the old first world is Europe and the United States. Mature capitalist systems clogged with regulation and profit margins tightly squeezed, but still entrepreneurial to a degree. In fact, the two sectors I picked in the entire world to buy in March 2009 for a 5 to 15 year rally, and by the way, I'm wrong on that, it's probably more likely 15 to 30 years. But the two sectors I chose were, of course, Australian resource stocks, but also European fashion labels. They're the two favourite sectors I still hold. Why? Because they have the same market. What's their market? The new first world. Global growth is about the new first world. Why is the new first world so prosperous? I'll give you another couple of terms. One is the word aspiration, and the other is intra-regional trade. Since probably the turn of the century, global growth has been driven by intra-regional trade. That is, the countries of Asia and Latin America discovering that they can trade with one another and make just as much money trading with one another or more than they can by trading with Europe and the United States. Now, if you think that concept sounds a little far-fetched, you might like to note that even today, already, less than half of China's exports go to Europe and the United States combined. Less than half. So when we constantly hear this bombardment of Western ivory tower economic thought along the idea that, you know, Asia, China in particular, Latin America need the United States and Europe to be healthy, no, they don't. Since 2008, I've argued all we needed out of the United States was 0.0 growth and the world would have a party. Anything above that and the world has a bigger party. And that's exactly what we've seen. Where was global growth last year? It was a very strong number. It's going to be above 4%, I still feel, when the final numbers are in. And I was hoping it would be close to 5, but I thought the fourth quarter US GDP would be around 3.4, and that was a bit lower. But still, we're going to see strong global macro data from last year, and we're going to see even stronger numbers this year. Because what was achieved last year was under the climate, the sentiment, and the media bombardment of it's the end of the world, doom and gloom. Not even that, though, could get equity markets anywhere near their 2009 low. So markets held up reasonably well. The other market that held up remarkably well was the euro. The euro was only down a few cents on the whole year. Had a volatile year, but it was only down a few cents on the whole year last year. But the media headlines would have you believe that that market collapsed. Not at all. It's resilient. Why is it resilient? Because it's the only viable reserve currency to the United States. Everyone is still a little US-centric. We have to get past that. That's why I called it old first world. Okay? I'm glad someone's got a different view. Please ask questions when I finish. Look forward to it. We have this US-centric view. The United States is no longer the biggest economy in the world, nor is it the most entrepreneurial. The largest economy in the world is the Eurozone. It's $2 trillion a year bigger than the United States. The most entrepreneurial country in the world, I would put to you, is China, and has been for some time. Now, please be aware that I do give the same speech in Miami in the United States, and I get a rather significantly negative reaction, but someone has to be the messenger. The point is that we're going to have very strong growth this year. Even in Europe last year, all this doom and gloom about public balance sheets. Private balance sheets are very healthy. In fact, corporate profits in Europe last year rose 10%, and corporate profits in Europe this year are expected to rise another 10%. We've got to disassociate this idea that public debt in some European nations is a problem for private, particularly mining companies in Australia. Nothing could be further from the truth, and yet for some reason the Australian media, perhaps wanting to be part still of the old first world, really latched onto the idea. And in Australia, the sentiment here was probably more bearish as a result of European sovereign debt challenges than it was in most other parts of the world. We really have to disconnect from that. I mentioned intra-regional trade. That remains vibrant. What are the German shipping companies planning and building for? Coastal routes along Asia, Brazil-China route, coastal routes around South America. Okay, they're the new growth paths. We're going to see robust economic growth again this year, I would say 5% or higher. I'm very encouraged. IMF and World Bank have downgraded their forecasts. Have you ever seen their forecast track record? It's abysmal. Okay, always be encouraged when they're bearish, because they're always bearish at the end. Always, be a little bit skeptical if they get excited. When we see the IMF saying how terrible things are going to be and they need to build their war chest, well, of course you would, at the last possible opportunity, say how dire things are so you can accumulate as much funds and as much power as you can. A little bit cynical, perhaps. What I'm saying to you, though, is that the negative cycle has come to an end. In fact, everyone has been so bearish, global equity markets or commodities, that attempt to sell commodities last year that didn't work, that again a global recession was priced in. Again, there's no sign of a global recession whatsoever. In terms of European sovereign debt that everyone talks about, there was not one bond auction that was not oversubscribed. There was one exception, tiny exception, because it lasted for 30 to 40 minutes in the aftermarket only, and that was that German Bund auction. That auction, everyone held back. The Germans wanted a very keen price. The market held back. The moment the auction closed, was slightly undersubscribed. All of that was sold in the aftermarket in 30 to 40 minutes at 3 points higher difference in price. There's always been a lot of money around. There's always been the talk of sovereign debt funding crisis, and yet all their auctions are oversubscribed. Greece and Spain now pay on their paper similar to our cash rate in Australia. That's how serious the crisis is. When the Italians, when the media tried to shift the crisis onto Italy late last year, I told all my clients the week Italian bonds were going off at 7.5% to buy everything they could, and the markets never got back there. Because Italy was different to Greece. In Greece, you had a leadership that wanted to do the right thing. In Italy, you had a populace and a government, a parliament, if you like, that wanted to do the right thing, and the only thing that was the problem was the leader. When I was in Rome about 6 weeks before Berlusconi resigned, and so for a brief period I was able to say, when in Rome, do as Berlusconi does. But it hasn't lasted very long. And now we're on to a new phase, okay? And Europe, there isn't going to be a contagion. And yes, the problems in Europe are huge. They're very similar to those of Detroit and California and Michigan. But even in Detroit now, they've just registered a fiscal surplus for the first time in a while. So things are picking up all around the world. But in Europe, No one, particularly the Americans, have gone anywhere near as far as the Europeans have in fixing their problems, resolving their long-term issues. Europe will be the most fiscally responsible union of economies for the next 10 to 20 years the world has ever seen. You know, we have to see the long-term benefits out of their short-term errors. Okay, they certainly have a huge problem, but they've dealt with it very effectively, and hardly anyone ever says that the leadership of Europe has dealt well with it. But Germany and France seized the opportunity to rule Europe for the next 30 years, because that's what they were given this year in this crisis. And they have seized it, and they will hold that, and they will progress that. Worst case scenario, these talks about Greece. Again, I think there's a lot of posturing before an outcome that will be favourable. But for instance, if we're all scared, what will the market do if Greece defaults? Well, the euro will go through the roof, for starters, because the euro will no longer have the weight of Greece in its union. So, you know, I'm bullish the euro on that basis. I'm more bullish the euro really on the basis that Europe is getting its act together. So the United States, I always said the United States, since 2008, I said the United States would be first in a recession and last out of recession, because that recession was a game changer. The United States no longer leads the global economic cycle, it follows the global economic cycle. The United States was rescued by strong rest of world economic growth and by a falling US dollar. One thing you can be sure of is that US dollar strong dollar policy stands for the orderly decline of the dollar. So the one risk to the industry here is a higher Australian dollar, but that will be a product of higher commodity prices, higher demand for commodities, and also the currencies of our markets will be appreciating as well. So we'll certainly see significant Australian dollar, US dollar gains, but it may not be such a sad story after all, because the main driver of that remains the resources industry. If I can just sum up by saying, thank goodness for all the doom and gloom the media has poured upon the market for the last year, because that is exactly what has created this huge disconnect between sentiment and reality. The economic reality is incredibly robust and prosperous, and sentiment is extremely bearish. That creates an incredible investment opportunity. Thank you.